What's going on, guys? In this video, I want to go over a very stupid, simple way to pass prop firm evaluations. Now, again, full transparency, this is going to require you to have a little bit of a bankroll because some accounts will get lost in the process. But I think you guys all kind of understand that. Now, first things first, we always got to talk about risk. I know the boring stuff, but the way I analyze my risk with prop firms is like this. So for example, right now, Apex is 80% off. So you can get a 50K account for, let's call it 35 bucks. That's my risk. Okay. Now I'm going to get $2,500 worth of drawdown, and whatever happens in between that, the most I can lose is $35. So I trade, and I come from trading equities as well as options. I can't even get into an options trade or an equity trade and risk 35 bucks on the size that I trade. Normally I'm trading 10 contracts of Tesla, 10 contracts of Nvidia. My stop loss is probably going to be 500, 600, 700 bucks per trade. Now, when you get into trading futures, we take a lot of trades, guys. So we don't want to be risking $500 every single day out of our hard-earned capital, but I have no problem risking 35, 70, $100 a day. So what that means is I want to go out there and I want to buy at least 2 to 3, 2 to 4 evaluations. That way I can have them. I can take 3 to 4 trades a day, depending on what happens with one particular account. Now that that's out of the way, let's get into the good stuff. The strategy that I'm looking for, I'm really looking to play moving averages, supply and demand. If you guys haven't followed me for a while, you guys know I operate a very simple theory when it comes to trading. Supply to supply, demand to demand, very simple. I use moving averages, I use the VWAP, I use Bollinger Bands, I use linear regression channels. But let me give you the most important ones that I like to follow. It's the 5 simple moving average. So when we're really power trending, I like to use that 5 simple moving average to kind of keep me on the right side of the short-term move, okay? If I'm trading, between a 1 and a 5 minute time frame. 20 SMA generally starts my trades. A lot of you guys know the 20 SMA setup, the 20 SMA strategy. I've got over 1,000 videos on it on my YouTube. You guys can go back and pull one up. 50 SMA, 200 SMA. Okay, so there's only 4 moving averages on my chart. The only other thing that I include, you can see this blue line here, blue line here, blue line here. This is a linear regression channel 50. Okay, so I chart on Thinkorswim. It's a standard indicator, and I love it. It works out really great. So the exact strategy that I'm using to pass these prop firm evaluations, for one thing, we already understand I'm willing to buy 2 to 3 accounts to potentially pass 1 or 2. I'm willing to buy 2 to 4 accounts to potentially pass 2 accounts, okay? If I pass all 4 of them, great. If I fail, one of them, who cares? I'm only risking $100. So with that being said, I'm going to trade a little bit more size, and I'm going to trade probably between 2 and 4 mini contracts. Yes, if you are trading a funded account, and if you've watched any of my videos before, I would recommend never trade minis, because when you're in a funded account, it's just too easy to blow up an account when you're trading mini contracts. But in an evaluation where our risk is very defined, and we understand that trading is a probabilities-based business where you're not going to win every trade. Let's say out of 10 trades, if you hit 65% of your trades, you're going to lose 3 trades, 3.5 trades. One, maybe let's call 1 break even, 3 losers, 6 winners, right? But if you're trading the right amount of size with an evaluation account, like 2, 3, 4 mini contracts, and you start taking, let's call it 10 points. So 10 points on 1 mini is $200. So if you're trading 2 of them, now it's a $400 trade. If you're trading 3 of them, it's a $600 trade. Pretty basic math. So if you start to look at that P&L, a $600 winner at around a 65% win rate means that we can go on a series of winning 4, 5, even 6 trades in a row. Does it happen? Sometimes. Does it happen all the time? Of course not. But you could go on a streak where you're winning 4, 5, or 6 trades in a row at $600 each. Now, if you just do the math on that, 1 trade at $600, trading 3 mini contracts, times 2 is $1,200, times 4 trades is $2,400. And now you're right in that sweet spot of passing that evaluation. So realistically, when you start thinking about how do these guys pass in a day? How does everyone seem to pass in, 2 or 3 days or even a week? They're trading bigger size, 2, 3, 4, 5. Some people I know trade up to 10 mini contracts. That's very risky. I don't recommend that. That's like asking to burn your $35. But trading 2 or 3 or 4 mini contracts, and again, let's just get into some of the strategy, some of the setups. So what I like to use is zones. I like to use levels, key areas of interest. If the market touches this area, I want to do this. If the market loses this level, I want to do that. And that's how I operate. I get in, I fire those 2 to 4 mini contracts. I look for 10 points. I look for 8 points. Sometimes I get lucky and I make 15 points, 12 points, 20 points. Doesn't happen often, but a lot of the times I'm getting into these trades around these key areas and I'm taking profits very, very quickly. So if you look at today's price action, again, today's price action, we're in bullish context overall. Yes, the market did come down today, but if I was to go to, let's say, an hourly chart, okay, and I zoom out a little bit, if you just kind of look at the previous 1, 2, 3, 4, 5, 6 days in a row, the market is moving up and to the right. This market is in bullish context, meaning we need to be looking for the dip buys to go long. Does that mean that we can't take or partake in any shorts? Absolutely not. We just have to understand that if we are going to scalp a short position, we are scalping a short position not with the idea that it's going to go lower, meaning and there's a big difference between stocks moving down and a stock moving lower. We're not trying to take this, lower, right? We're just trading it down, right? Or vice versa, however you want to use the terminology. So what I'm looking at here is if I understand that the higher time frame is in bullish context, any short that sets up, it's a scalp. I'm scalping it into demand because I'm anticipating a market bounce. So if we look at today's price action, we're below some of this 5-minute supply, linear regression, 250 and 20 SMA. Now, again, if your strategy presents itself, you got to fire on it. And what does that mean to fire on it? You need to take your setups when they present themselves. Look at the setup here off the open. The low is 25,297. This candle also closes below your 20 SMA. Now the next candle shoots down to 25,290 from a price of 25,297. This is a quick 7 points here. If you're taking 5 points, that's $100 a mini. You can definitely do the math. If you're trading 3 or 4 minis, that's a 3 to 4, even $500 trade, depending on how long you hold it. If you would have held for a little bit longer, it goes all the way down to 250. You guys could have definitely passed an evaluation on this potential landslide here. That's how you do it. Now, the next area that I'm looking for, because I'm anticipating bounces, is I'm looking at ranges. And I look at ranges in about a 20 to 25 point range, a 20 to 25 point zone. So if I know that I've got a demand zone sitting here at my linear regression at about 25,245, if I take that as a range and I give myself a 20-point zone, right? For example, a 20-point zone, that would take me up to right about here. So anything that comes down into this range, assuming we don't lose my absolute demand zone, there's a potential to bounce. So when we actually dropped here, I'm also analyzing this 3-candle pullback into a demand zone. This is the first time that we are attempting to retest this level. Buyers, they might try to defend this. Now, do I know that they're going to defend this and put in a 51-point candle? No. But can I put on a trade when we come into this zone and tell myself, well, if I can take a long here at 25,250, at 25,255, at 25,260, and I put a stop loss below 245, that's a 15-point range. That's not that big of a range. So I'm willing to put on that risk. Now, maybe we're not going to go put on 5 mini contracts, but maybe we can put on 2. And if we put on 2 and we get involved in this move, these moves happen very quickly where you're taking 15, 20 points like in a minute, in 2 minutes. And when you start to think about it, again, $100 for every 5 points. If you're taking 20 points, you're looking at about $400 a mini contract. This is a potentially $800 trade, $1,000 trade, $2,000 trade, depending on how many minis you're trading. So you can definitely get in. This is how I do it. This is how I try to pass prop firms extremely fast. Now that we know that we've got this demand zone, okay, we've got this demand zone here. If we break it, okay, if we break it, look at the wick here. If we break it, my eyes are lighting up here because now we've cracked through the low of day. We've broken my demand zone, and maybe the market's going to have a deeper pullback, a stronger pullback for buyers to get in and bounce this. So if we confirm the low of 25,244, which is below my linear regression, I can go short. And look at what happens here. We flush all the way down to 25,226, another 20 points here. So realistically, on a day like today, you could have taken a trade here for 5 to 10 points, taken a bounce here, taken a short here, or hell, even just avoided the long if you're a little scary on it. Just avoid the long, take your initial short here, and then get in through the confirmation continuation. And you could have taken at least 5 to 10, 5 to 15 points on a few mini contracts, and you're well on your way to $1,000 a day, $1,500 a day, $2,000 a day trading those mini contracts. This is how I trade fast, because I don't, and I fire a lot of trades. Either I'm going to make money or I'm going to blow the account. That's how I'm kind of looking at it, because I'm only risking $35. So for every account, it's like one trade for me is what I'm looking at. So I'm risking $35 a trade. I'm trying to take as many trades as possible. I'm trying to trade, size that's going to get me to passing these accounts in 2 to 3 days if I'm taking a handful of trades a day, or I'm going to lose the account in a couple of days, and that way I at least get into another account to try to pass it. Again, when you start trading this way, it's going to open your eyes up to the possibilities. Because what I think that's happening with a lot of traders is they're trying to be too perfect on an evaluation. Well, I want to trade this as if it's my hard-earned money, and I'm going to play, one micro. I only recommend trading one micro when you're just figuring out your strategy. Okay, does the proof of concept work? If I take 10 trades, and this is what I would recommend. If you're testing out a new strategy or a new broker or platform or whatever, take 10 trades on one micro. What's your win rate percentage? You win 50% of the trades, 60% of the trades, 70% of the trades. From there, now we scale. Okay, because I don't want to be stuck trading an evaluation for 60 days, 90 days. It's preposterous to me. It doesn't make any damn sense. The whole reason why we're trading these prop firms is to use them for leverage so we can make more money, scaling them across multiple accounts. Now, when we get into the funded accounts, you have 10 accounts, 15, 20 accounts. You can definitely trade a couple of micros, make $50, $100 a day, scale that across 10 to 15 accounts, and now you're doing really, really well for yourself. But when we're trading the evaluations, we want to get in these puppies. We want to pass them quick. We want to take setups. We want to play zones. We want to play from supply to supply, demand to demand. Here was another trade that I took. It wasn't the best trade in the world, but when I seen us flush through this linear regression, remember I took the short here on this candle. I kind of waited for a bottoming out process here. And then what I was really looking at was if I go to a 1 hour chart, okay, if I go to a 1 hour chart and you kind of look at this area right here, okay, this red line, this area is sitting at 25,200. Okay, that's your 50 SMA. So when I go back to my 5-minute time frame, well, I want you to look at these candles here, these 3 candles. These candles were flushing down into 25,200. So that's flushing into that 50 SMA. Again, remember, if I believe stocks trade from supply to supply, demand to demand, well, didn't we lose a level of demand, and isn't this trading into a higher time frame demand? What's probably going to happen on the first test? A potential bounce. Because remember, why would we bounce? The higher time frames, 1 hour, 4 hour, daily, is in bullish context. So the market is going to try to defend some of these prices. These are not red candles that are falling off of a cliff. These are red candles that are pulling back into previous buyer support to potentially go higher. So when you see us flush the higher time frame, and again, this is going to require you to actually look at a 1 hour chart, but once you start looking at the higher time frame and correlating that with a smaller time frame for entry, you're going to see these type of momentum driven price action plays where you can get in on and fire a couple of minis at this and try to pass those evaluations. I hope you took something from this video, guys. If you guys want to try trading like this, trading quickly, trading 2 to 4 mini contracts using zones, Apex is 85% or 80% off with $85 activation fees. You guys can also join my Discord. Every day I do write-ups and give specific levels and price targets that I'm looking at to potentially bounce and go long and go short, this, that, and the other. So you guys can join my Discord. That link's down in the description box below. I'll catch all of you guys on the next video. I only ask one thing above all. Make sure to hit the thumbs up button on this video, guys, and I'll see all of you guys next time.